This is the stock market analysis. We're going to give you a 1 to 3 month view. We're going to look at the SPX, Nasdaq100, and the VIX for correlation purposes. I'm going to first go to the VIX to do this analysis because I think it's going to be really important to kind of zoning in on the time frames that we're looking at. And this chart I'm going to show you starting out is kind of a messy chart. And let me just switch over. I have a high yield chart, and if you didn't see this analysis in the beginning of the show, please do go back and you'll see why I am going to be pointing to a low coming in July or August for the stock market. But I'm not going to review this again now. Go back and watch the beginning of the show if you didn't do that. But now we're going to switch over from HYG to VIX. And this is the weekly chart in VIX. Yes, this is a very busy chart, and does it ever have important information on there for you to see? Let me just zoom in a little bit more. These are harmonic families. Now, if you're brand new to our analysis, on the bottom are cycle brackets. If you're an old pro at our analysis, then you're using the cycle brackets right on your charts, or you're getting it on our charts that we supply to Level 4 members live for Thinkorswim platform. So each of these harmonic families is broken up into minor halves and minor quarters. All cycles don't break up into halves and quarters. They might break up into thirds, and they might have cycles that are out of phase, not perfect like you see in here. As you could see, this big dominant cycle right there, it translated into this big upside move and then came down right in here. The green areas are areas where the stock market moves into higher risk periods. That's after the minor fourth quarter right there, and after the minor fourth quarter right over here, and after the minor fourth quarter right over here. Implied volatilities then begin to move up and can move up sharply, as you see right in here. So where are we right now as far as the harmonics on the VIX? Well, you can see in there the note that we have in there. The next major VIX low, the timing range for that is mid-May to early June. These blue vertical lines you see right over there are the three of them, meaning that all three of these cycles are coming down at the same point. When that happened right over here, you see implied volatilities were falling and the stock market was firm. Right over here, we're getting to where we're getting a rebound, but the fourth minor quarter cycle tends to not have higher implied volatilities that can last. That means the stock market is likely to stay in its rebound all the way into this timing zone right here. That's the timing zone for the implied volatilities, the VIX, to make their lows. They got down over here to about 18.5. We could see them down under 18 right over here in this period between middle of May and early June. If that happened, then you know that the stock market still would be in decent shape in this rebound. And this is really the time frame. Then when you get past this timing zone, that's when the stock market high risk begins again. And if you caught us in the beginning of the show, we talked about the May-June time frame. April, May potentially is a stronger market. We said 4 to 8 weeks from now, likely we're going to see a peak in the market. That's the peak in the stock market at these low implied volatilities. And then the stock market risk begins again. That's why we keep saying this is the time to be a seller in the stock market over these next couple of months as the stock market begins to move up. So let's take a look at SPX, which now we have a reason to be pointing to that the high date somewhere up in that May-June period. And you can see in our projection right up over here that we are looking for this May-June period for the time that begins to roll over. Now, it rejected getting up near the 78.6. I said also in the beginning of the show that it's very often that when bear markets form, and if you look at the HYG, it didn't rebound hardly at all, and that indicates trouble for corporations. Add that to the fact that this is a lower low right over here than this, and it suggests that a big failure is coming in this area. Now I'm going to show you three charts following this. Two charts following this, the Nasdaq and the Russell. I want you to see that the rally got up close to the 78.6. As bear markets form, sometimes one of the major indexes gets up over the 78.6 and even tests the all-time high, with other indexes not confirming. So there is room in here on the upside still, and the stock market is pulling back in what we believe is a short-term low that's going to form and then try to get up here again. So we're looking for this decline to end, it try to rally again, but really struggling up here with the potential for 46.65, maybe up into the 4700s for the S&P 500 before it then begins to top. The nested bottom right over here is the September to November period, and I'm looking a long way out, kind of big picture, but that's really where there's a potential for a lot of declines. And I showed you July, August on the high yield bonds, that they're pointing down sharply into that area. So late summer into the fall could be a lot of risk for the stock market out there. In the meantime, it's in this sharp rising phase, almost got up to the 78.6, and likely to try to get higher again before this is over with. You can see in here our analysis is made up of three major components: cycle analysis, momentum analysis, and on the weekly chart we're using our reversal scout, and also what we call swing high, swing low analysis, where we do the fib projections and support and resistances. So in this case, momentum turned up right over here, and of course it's moving up, so it gives us a sign that it's fairly likely there is upward inertia that's going to keep the market moving higher for the near term. If the market were to get much weaker and this turned down again, that would be a bad sign. You can see what happened when it started to falter here and then turn down. It set up a decline through this entire cycle to this nested area, as we call it right there. So that explains the S&P 500 again getting up near the 78.6%. Now Apple had an absolutely monstrous move as it rallied from 150 up into about 175. And then has pulled back. But while the S&P 500 threatened the 78.6, the Nasdaq, which also has now established positive momentum, has rejected near the 61.8. So you see the Nasdaq is actually weaker, even with Apple moving up so strongly. That simply tells you that Apple has been leading this way up, but the rest of the Nasdaq actually is lagging the S&P 500. So that gives you some sense that the rallies are likely not to be able to hold up that well. When you look here at this note that we have here, again, the major nested bottom out there in all indexes sinks out to a major decline into September through November. So again, the Nasdaq gets up to the 61.8%. When I look at the small cap zombie stocks in the Russell, you can see in here much weaker, and it gets up into that resistant sell zones right over here and begins to struggle. Now this right over here is the intermediate 50%. Remember, the Nasdaq made it up close to the 61.8 right here. The S&P 500 made it close to the 78.6. These small cap really stocks that don't have much in the way of earnings, well, they really get hammered by higher interest rates, and higher interest rates are coming. And this calls for this cycle, different than the rest of the market, a decline actually that could come out into June period right over here. And then ultimately this big cycle right here pointing to a serious decline in the market out into October. So that's that same period, September to November, where there's a lot of risk in the markets. The sum of the evidence as I look at this is that, we're in a rebounding period, but everything that is rebounding is mostly lagging. The S&P 500 doing much better than the other indexes, and the VIX pointing to this rebound that we have in the market, bottoming sometime in the late May period, and then entering into a period of higher implied volatilities, which means likely higher volatility in stocks or lower prices, with the Nasdaq and the Russell lagging, and the Russell lagging a lot. There is a correlation between the Russell and HYG, high yields, of course, because higher interest rates just simply sabotage the earnings of companies that borrow a lot of money, and that would be a lot of stocks in the Russell category. So that's kind of the 1 to 3 month plus view for the stock market, with really extensive look and, I think, proofing, and in this case, not proof of life, but proof of death for the stock market bull market, even though it has probably 4 to 8 weeks to go in the rally that you see right now. This is an important announcement, the Ask Slim Cycle Analysis Workshop Special. We only do this for about 2 weeks, and we do it every 6-7 months. So if you've been waiting for the special on our cycle analysis workshop, this is the time. This is my method of analysis that you can learn. I developed it over 47 years. This workshop took a couple of years to write and over 6 months to produce. It was a massive undertaking. 21 video modules, plus connected to it are many of our tools for text videos as they apply to each of these modules. You will never look at charts the same as before, just because you will learn a whole new way to project in both price and time and really understand the language of the markets in a whole different way. And on top of that, on May 10th, we're going to have a live event for workshop members. So you'll be able to ask your questions. You'll have plenty of time to review the workshop. There's hours and hours, and many people that have taken this have watched it 3 times through. So you will be quite busy learning from this, and so many things that you will learn that will make so much sense to you. Go to AskSlim.com to workshops for info, and also there's a front page link where you can request. You click on that and then let Matt know that you want the special discounted link. And Matt also has a demo reel with a lot of clips from the video, and you can ask him for that also. This is a special $400 discount for 2 weeks only. And if you're a premium member, any level, or you join right now and become a premium level, you'll get an extra $100 off. That's only $797 for this massive, informative workshop. I'm telling you, you would pay thousands and thousands and thousands of dollars for something similar. Of course, nobody could create anything similar to this because we're the experts here in cycle analysis. For that link, please write to Matt at AskSlim.com. He will then give you that information, or go to the top of the front page and click on that link that they put up there, and you'll be able to make that request. Cycle Analysis Workshop Special, only 2 weeks at this amazing price. Please do sign up now.